Imagine sitting at your desk, pouring coffee, and opening your software bill expecting $29. Instead, you see a $750 invoice. Your heart drops. You haven't changed habits or upgraded, but your costs skyrocketed over 25 times overnight. Welcome to The Art of Modern Tech, the show where we break down major tech stories before they break you. I'm Jennifer with Anita. Today's episode covers a story shaking Wall Street, Silicon Valley, and AI entrepreneurs. Before we dive, hit like, subscribe, and share. What we discuss today will impact your business, money, and future. Let's go.
The crazy part is that this is not a hypothetical scenario. This is exactly what is happening to developers right now, and it is sending absolute shockwaves through the entire tech ecosystem.
It really is. Welcome to a massive reality check for the tech world. Today, we are unpacking what is arguably the biggest doubleheader story breaking the internet right now. On one side, we have the company behind Claude quietly filing paperwork with the Securities and Exchange Commission, gearing up for what could be a historic public offering. On the other side, the developers actually building the future are being crushed by the sudden, harsh realities of AI infrastructure costs.
It is the perfect storm. We are watching the collision of massive corporate ambition and the brutal, ground-level economics of artificial intelligence. For the last couple of years, we have been living in this subsidized honeymoon phase. AI felt like magic, and more importantly, it felt cheap. But the events of this week prove that the honeymoon is officially over.
Let us start with the Wall Street side of the equation. The creators of Claude have filed a confidential S1 to go public. For anyone outside the finance bubble, filing an S1 is the formal step a company takes before an initial public offering. But doing it confidentially is a very specific strategic move. Anita, why would they choose to do this quietly, and why right now?
Filing confidentially is a fascinating maneuver. It allows a company to submit their financial records to the regulators and get the ball rolling without immediately opening their playbook to the entire world. In the hyper-competitive AI arms race, your financial burn rate, your revenue growth, and your compute costs are highly guarded secrets. If they filed publicly right away, their biggest rivals would instantly know exactly how much money they are making and how much they are spending to train their models.
So it is essentially a way to test the waters without showing your cards to the competition.
Exactly. But the why now is even more important. Training next-generation frontier models requires an incomprehensible amount of money. We are talking billions of dollars just to buy the graphics processing units, let alone the energy to run them. Private funding rounds are massive, but eventually you need the deep, bottomless pockets of the public stock market to sustain that kind of burn rate. They are going public because to win the AI race, you need a war chest that only Wall Street can provide.
But there is a profound philosophical tension here, isn't there? This is a company that built its entire reputation on AI safety, ethical development, and taking a measured approach to artificial general intelligence. The moment you go public, your primary legal obligation shifts to maximizing shareholder value. How does a company balance the slow, careful work of AI safety with the relentless, quarter-by-quarter growth demands of the stock market?
That is the trillion-dollar question. It is incredibly difficult to serve two masters. On one hand, you have your safety researchers saying, we need to delay this release by 6 months to test for vulnerabilities. On the other hand, you have institutional investors demanding a product launch to hit revenue targets. Historically, when ethics and fiduciary duties collide on Wall Street, fiduciary duty wins. It will be a massive test of their corporate governance to see if they can maintain their safety-first identity while feeding the public market.
Which perfectly bridges us to the second half of this massive wake-up call. The cost of running these AI models is catching up to the industry, and the bill is finally being passed down to the consumer. Let us talk about the absolute outrage happening right now with GitHub Copilot.
Yes, this is the story that has developer forums completely melting down. For a long time, developers were paying a flat, predictable monthly fee for an AI coding assistant. It was a brilliant deal. You pay your subscription, and you get unlimited help writing code. But they just switched to token-based billing.
Anita, for those who might not be deep into the technical weeds, how would you explain token-based billing?
Think of it like going to an all-you-can-eat buffet. You pay $30 at the door, and you can eat as much as you want. That is the old subscription model. Token-based billing is like the restaurant suddenly changing the rules while you are already eating, and now they are charging you for every single grain of rice you put on your plate. In the AI world, a token is roughly a piece of a word or a line of code. Under the new model, Every time the AI generates a suggestion, you are paying for the compute power required to generate it.
And that leads to the nightmare scenario we are seeing on Reddit, where a standard $29 monthly expense balloons to $750. That is not just an inconvenience. For an independent developer or a small startup, that is a business ending expense.
It is devastating. And what makes it so frustrating for the community is the lack of predictability. When you are writing code, you rely on trial and error. You ask the AI for a solution. It gives you something slightly wrong. You tweak your prompt, and you ask again. Under a flat fee, that iterative process is natural. Under token-based billing, you are literally watching a meter run.
It fundamentally changes the psychology of creating, doesn't it? If every time I hit the tab key to autocomplete a function, I know it is draining my bank account, it introduces massive friction. You stop experimenting. You stop playing with the technology. You start rationing your thoughts just to keep your overhead low.
That is a brilliant way to phrase it, rationing your thoughts. The cognitive toll of microtransactions is real. It stifles innovation because the cost of making a mistake becomes too high. But if we zoom out, we have to look at why this switch is happening. Microsoft, who owns GitHub, is not doing this just to be malicious. They are doing it because the compute costs are staggering. Every single time, millions of developers query that AI servers in a data center are working overtime. The flat fee was likely a loss leader to get everyone hooked on the tool.
A classic Silicon Valley playbook. Subsidize the product to build a monopoly, make the tool absolutely essential to the workflow, and then, once the user is locked in, flip the switch on pricing.
Exactly. They made the AI assistant so good that developers forgot how to work without it. Now that it is deeply integrated into enterprise workflows and daily habits, the trap snaps shut. The era of cheap AI was an illusion funded by venture capital and tech giants trying to capture market share. Now we are entering the era of true cost.
So when we look at both of these stories together, the confidential S1 file and the outrage over token-based billing, what is the overarching narrative? It feels like we are witnessing a massive tectonic shift in the tech industry.
The overarching narrative is that the infrastructure of the future is incredibly expensive and the power dynamics are shifting. The company behind Claude going public is proof that you need infinite capital to build the foundation. The developer outrage is proof that the end user is ultimately going to pay for that foundation. It paints a picture of a future where only the absolute largest corporations can afford to build these models, and everyone else is just a tenant renting access by the token.
That is a terrifying thought. We were promised that artificial intelligence would be the great democratizer. The narrative was that a kid in a garage with a laptop could build $1 billion company because AI would level the playing field. But if the cost of merely accessing the intelligence scales exponentially with your usage, it seems like the gap between the tech giants and the garage startups is actually going to widen.
That is the great paradox of this technological revolution. The tools make individuals wildly more productive, but the ownership of those tools is becoming hyper-centralized. If your entire business relies on an API, and that provider decides to multiply their pricing by 25 overnight, do you really own your business? Or are you just building a house on rented land?
Building on rented land. That is exactly what this feels like. It is a harsh reminder to every creator, developer, and entrepreneur out there. You cannot blindly trust that the tools you use today will cost the same tomorrow. Diversifying your workflow and understanding the underlying economics of your tech stack is no longer optional. It is a matter of survival.
Absolutely. The gold rush is still happening, but the people selling the pickaxes have just realized they can charge by the swing. And as these AI giants transition from private research labs to publicly traded behemoths, the pressure to squeeze every drop of profit from those pickaxes is only going to intensify.
It makes you wonder what the landscape will look like a year from now. Will the open source community be able to step up and provide viable, cost-effective alternatives, or are we locked into a future dictated by public market valuations and token meters?
I think the open source movement is our best hope for keeping the ecosystem balanced, but the sheer cost of compute will always be the bottleneck. It is going to be a fascinating and frankly ruthless few years ahead.
Ruthless is the perfect word for it. We are watching the rules of the next decade being written in real time, in confidential SEC filings and hidden pricing updates. Thank you all for joining us on this deep dive today. As you go back to your keyboards, your code, and your businesses, ask yourself, who really controls the tools you rely on? And what happens when the bill comes due? We will be right here next time to help you figure it out. Your support keeps this show free every single week, and Anita and I are so grateful for every single one of you.
See you next Monday at 8 p.m. Leave a comment below sharing your thoughts on this pricing shift. Please remember to subscribe, like, and share this episode with someone who needs to hear it. We will see you back here next week. Let's tech today for the trends of tomorrow, for a future we have yet to imagine.